let's take a look at foreign investment. I'll start with foreign direct investment. We'll get a sense of what the trend line has been and how excited foreign investors are about coming in India. What you're seeing for the last year is just data till October 2022. This is from the Center for Monitoring of Indian Economy. But if you see before that, from 62 billion in 2019 to 74 billion in 20 to 82 billion in 21 to 84 billion in FY22. It hasn't grown in the way that foreign direct investment did in China, and because now Shankar made the point about the United States wanting to be Atmanirbhar, Europe wanting to be Atmanirbhar, does that then potentially, Dr. Lahiri, impact how much foreign investment could come into India in the years to come? Or do you see, because a lot of global companies are now looking at realigning their supply chains, because they want to look at a manufacturing base out of China, that India could potentially be the principal beneficiary of that?
Okay, Rahul, I'm very glad that you asked this question. See, in India, annual FDI has been above 40 billion every year since 2015. Prior to that, it was above $40 billion only in 2008. So from 2015, it exceeded 40 billion. By contrast, in China, every year it was above 100 billion since 2005 and above 150 billion since 2007, except in 2009. Now, I always look at this problem as not FDI in particular. The foreigners don't invest for the same reason as Indians don't invest. We need to have the environment, we need to have the setup which attracts investment. So I believe that private investment and foreign direct investment will grow in unison.
Okay. So this is as far as direct investment is concerned, which is in different kinds of investments in India. Let's look at portfolio investment coming into the stock exchanges, coming into different companies. So as far as foreign portfolio investment is concerned, last year was bad, where it actually, there was more foreign investment going out, more foreign money going out than coming in. Again, this year till October, where the numbers are available, more money went out. And Shankar, what's your outlook in terms of how you think foreign portfolio investors are looking at the India story at the moment?
Well, yesterday somebody told me that foreign portfolio investors in the last 5 days have withdrawn 6,000 crores every day. It doesn't look very good. We have the Fed policy today in the evening, or which is morning, this afternoon in the US. And how that progresses, what Chair Powell says about the US interest rates. Thereafter, there is also European central banks rate increase. There is Bank of England rate increase. So now there is a divergence in the global view about whether inflation has peaked or not. They all thought it had peaked, but in Spain they found it had come back. They thought that they were beating recession, but in Germany the economy contracted. So now, given all these uncertainties, the thing that matters to investors is rate of return. And currently, even if all things considered being same, China is offering a better rate of return than India is offering. So the money that comes out of the US when things settle there will move first to emerging markets, and for them they talk about emerging markets. It's about Brazil, it is about Mexico, it's about China, and then India. So in India's position as the fastest growing economy is not necessarily the reason why they will come here. They will come here because of the returns and how much liquid stock is there, what is the valuation, and Indian valuations are very high.
I just wanted to add one thing about FPI, foreign portfolio investment. The good news that I don't have, the economic survey has, is that in the last few years, you will find whenever portfolio investment, foreign portfolio investment has been negative, domestic investment has compensated for it. They're moving in the opposite direction. And here, there is something very interesting. When domestic investors think it's good prospect, foreign portfolio investors don't think so. And that's for the reason that Shankar has mentioned, that foreign portfolio investment is also dependent on what is happening elsewhere. But there is some amount of sort of, what should I say, forbearance that the equity markets are showing, which is sort of being compensated, FPI movements is being compensated.
Let me throw this to our experts in a way that a number of people in the last few days have been telling me that 2023, forget about election year, it's a year to play safe for other reasons, not elections, but because of the uncertainty that Shankar just spoke about. There are still fears that some parts of the world, the economies are contracting. There's a fear of inflation proving far more resilient than we believe. Given all that, should a finance minister today be playing safe? To quote what Pranjul Bhandari said on my program last night, should you be batting today like Rahul Dravid and not like a Virender Sehwag, or not like a Surya Kumar Yadav, to use a more modern cricketing analogy, but bat like a Chiteshwar Pujara? This is a moment not to take any risks, just play these 12 months to ensure macroeconomic stability. The monies then will come in, create a base. There is still no spurt in domestic demand. There is still concern over private investment in this country. Is this a moment not to make any big announcements, just play safe? Would that be the way to judge budget 2023? How safe can a finance minister play without taking any major risks? Is this that kind of a moment?
But the best case scenario would be do no harm, but a better case scenario would be to sort of ensure that Rahul Dravid stays on the wicket, has a good non-striker on the other hand, which means that the government will have to keep up its infrastructure investment. It will have to create a template to respond to the global challenges. The global challenges are big.
In recent times, Shankar, for example, finance minister has raised import tariffs, and that has sent out wrong signals to the world. And this government, in the name of Atmanirbhar Bharat, a number of critics say it's all very well to talk of Atmanirbhar Bharat, but you want to be part of the globalized world also.
But
I'm just wondering whether this is a moment to send out a message that India in this chaotic world is providing a measure of stability, and therefore continuity matters much more than trying something which only sends out negative signals to the world.
For India's own sake, it needs to sustain the current rate of growth. It also needs to create the impulses for investments to come. We are a resource-starved country. We need the FPI, we need the FDI. And remember, a large part of our foreign exchange balance is mostly money order economy, which is $80 billion to $100 billion, which flows in from remittances. So the temptation to do any experiments should be eschewed, but at the same time, I mean, you have to respond to the global challenges.